Hello traders, James Stanley with StoneX and FOREX.com. We have a breakout test in Bitcoin right now as it's trying to get through the 65K level. We had a pretty clean run earlier this morning on the back of PPI data, very similar to what we saw yesterday on the back of CPI data, but we've since seen that move pair back. I think there are a couple of interesting components around this. I wanted to discuss relationship with gold, how to work with a breakout, in what I consider to be a professional manner. I first need to look at a risk disclaimer. I'm going to leave this up for 15 seconds up front, 45 seconds on the back, and it will be in the description field of this video. Please review that, pause the video, take more time to review that if you so need. I will be on the other side, and we'll start looking at charts. All right, as mentioned, we have the current breakout being tested at the 65K handle right now. It doesn't look that attractive from the daily, but go down to the 4-hour, and there we go. We can see where we just popped above a really big level that has a bit of historical importance behind it. But I want to look at this. I want to start big picture and work our way down. If we look at this from the weekly chart, you can see where just a dizzying reversal began last October after the 125K print. And as Bitcoin was selling off in late 25 and early 26, you started to see a lot of people making the accusation or bringing up the argument that Bitcoin is not a digital gold, that it doesn't hold its water as an anti-fiat type of asset. And those are the types of grandiose statements you want to be really careful of, especially when driven by short-term stimuli. I think the difference between Bitcoin and gold is constituency. If you look at gold, you have a lot of central banks that have been buying. You have a lot of major players that have been accumulating for a long time. If you look at Bitcoin, very different backdrop. I mean, you do have like the Michael Saylors of the world, which I'm going to talk about in a moment, but you also have some long-term holders that are incentivized to take profits when we do get stalling at a level like a 125 or like the first test above 100. So, writing it off because of a bad 6-month or 3-month period, I think that's a dangerous trap. I think it's also really dangerous to look at something like the 4-year cycle and put too much weight behind it because there's just simply a small sample size behind it, especially as more and more people have gotten interested in it, have tracked it, have followed it. I think there's just more factors that are pushing price in one direction or the other. But with that said, I also think it's undeniable that, like gold, there is a strong interest rate component in here. And as a case in point, you could see it was late 2020 when the Fed was full pedal to the floor, even with the global shutdown, that Bitcoin started to put in that really significant breakout. And then as the Fed started to signal that maybe inflation wasn't supply chain related, maybe it wasn't transitory, maybe they're going to need to hike rates. As we started to see that, well, lo and behold, Bitcoin sold off pretty aggressively. Now, interestingly, this significant low was set right around the FTX fiasco. Now, if you look at this bigger picture, that's something that should have created even more selling. I mean, we were stalled down here around the 20K handle. We had one of the biggest firms in the space turn out to be, well, whatever it was that they were, and it got one leg lower. But then notice what happens. Buyers step in, hold the bid, even though logically this is something that should have sent it spiraling even lower. But a pretty clear example of where bulls were using that weakness as opportunity. And then the move had stalled for a little while, and then prices begin to rally. Now, what was happening in here was there was a couple of different things. One, in March of 2023, that's when regional banks in the U.S. started to wobble. That's when we started to see the Fed back away from their hawkish stance and instead start to say, well, maybe rate cuts will be in order at some point. As rate cuts became more of the topic, you can see where Bitcoin rallies in a very big way. So, like gold, there is an interest rate sensitivity component here. It's just not lockstep because they're different markets, and I think you have to expect that. But, a really good example is what happened back here in 2020. Gold initially flew on the back of all the COVID stimulus, eventually set that high, that first test above 2K in August. At the time, Bitcoin was struggling to get back above 12K. But it's almost like the world's preference for an anti-fiat safe haven shifted into Bitcoin from gold. And so as Bitcoin flew, gold was range bound with 2K as resistance. More recently, we had that episode last year. Bitcoin hit this high above 125, began to sell off. And then you started to see all the Bitcoin naysayers pointing fingers, laughing, digital gold, yeah, right. Well, more recently, Bitcoin has started to show strength against gold. Right now, we have Bitcoin in a breakout. Meanwhile, gold is clinging to that 2K level, 4K level, excuse me. 2K was a 2020 theme, but we're clinging to that 4K level. I mean, this is something where bulls could make a move, but they're going to need to take out that 4,200 level to negate this descending triangle. But, we had a test below 4K just earlier this week on the back of the Waller comments around inflation. And Bitcoin, on the other hand, is in the process of a bullish breakout. Now, if you watch my content, I'm not the kind of guy that's going to chase a fresh breakout for multiple reasons. First and foremost, I don't consider that to be professional. I think it's driven by excitement, it's driven by hope, and it's something that could easily turn into regret. Instead, if I want to work with a breakout, I'll wait. I'll see if it pulls back, and then I'll look for bulls to defend a higher low level of support, similar to what's shown so far, and then I'll look for that to continue. At least that way, if it turns out wrong, well, I don't beat myself up. I wasn't driven by hope and excitement. I was driven by logic. And I can contain the damage when that does happen, to a degree, at least, because I know exactly where to place my stops. I know where I'm wrong. And I know where the entire theme has failed. So taking a look at this chart of Bitcoin, and again, going back, you can see that 65K level has some historical importance. This was the high back in April, around the high of April of 21. This is where it had topped out in October, November of 21. More recently, it came into support earlier this year, failed, but now back in play. You can see where bulls are trying to hold this move on a short-term basis. We had the breakout on the back of PPI this morning. There's the move on the back of CPI yesterday. Go down to a 30-minute chart. You can see where there's been a pretty vigorous response to that 65K level already. It hasn't held. In my mind, this is something that times it out. It's bulls have had ample opportunity to make this move, but they haven't been able to re-encounter these swing highs as indicated by these upper wicks. So not a support zone that I want to work with now. What I need to do is I need to draw a game plan as to what levels I would like to act on. Now, right in here, you can see the types of higher lows that you want to see for continuation setups. Because it's almost like you could visually see where bulls are getting more and more aggressive. They're unwilling to wait for a retest of that prior swing low, and so they jump in a little bit earlier, a little bit earlier, a little bit earlier. Those higher lows prelude a breakout that ends up running pretty aggressively. Finally got above that 65K handle. So I want to look at this as a zone of interest. It's right around 64,397, 64,441. I want to put something a little bit more aggressively because you'll see this swing low was kind of like a touch and go. Like we pulled back and then buyers responded pretty well to that. And it coincides with the prior swing high. It's right around 64,707. So I want to look at this as an S1, that as an S2. And then for S3, I want to go a little bit deeper because you'll notice when we had that initial thrust of breakout after the CPI report yesterday, it tried to pull back and then bulls jumped on that bid. That level coincides with the prior swing low right back in here. So there's a bit of historical reference right around 63,589. Now, if we get below 63,589, I'm not necessarily going to say that this rally is done and dead. For bigger picture and validation, I'm probably looking for something like below that, 61,750. It's just that level's so far away, I can't really use it from a risk management perspective. So that's what I have in Bitcoin. That's what I'm looking at as we go into today's close. As always, thank you for your time and happy trading, ladies and gentlemen.